Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today, and you like that little throw in the water there, how the water kind of moves? Well, we're talking about ride sharing takes to the water. Well, ride sharing's been pretty big with cars and car sharing and so forth. Now they're looking at doing it for ships and for boats and so forth. Actually, people are getting tired of paying the high slip fees, getting tired of the operating costs. I mean, boats are very expensive, so now the sharing is becoming into play. Look at the growth here. It grew 58% from 2011 to 2015, but more interesting as well, sailboat manufacturing and production fell by 17%. It's pretty amazing what's going on in this industry here. And also, the way you can get these boats is either bareboat charting or full crew. What that means, you provide your own crew and so forth. I'm not sure if you want to provide there, but you can do it yourself, or the full crew. A lot of options here for you.
Yeah, definitely. This is just an interesting industry as a whole, the whole ride sharing thing. They do it for jets and Airbnb, so it's a lot of different things now. It's not just boats and cars. There's a lot of sharing options out there now. Sharing is caring. But fractional share of companies such as SailTime, Boatbound, and Boatsetter, so you can actually buy a fraction of the boat versus the whole thing. Very interesting here. And renters pay $1,500 to $10,000 per week. And actually, one company, Boatbound, had $25 million in reservations last year. They're looking to double that this year.
It is definitely a growing industry. I did look for public companies would benefit from this. Nothing yet, but we'll keep our eye out because this is a growing industry. We'll see if we can find a public company to start investing into. One public company that is dealing in the water, and that is Carnival Corporation. Carnival Cruise Lines. They're a big cruise company. See the current price around $47.61, the high $55.77, the low $40.52. We say they were up, nice climb here up to about over 54, now back down to 47. Let's see what the numbers look like to see if this is a good time to invest in Carnival Cruise Lines. Their symbol is CCL. Well, looking not too bad. Their sales are up 1%, but those earnings, a nice jump here, 59.9%. Now, they do pay a decent dividend of 3%. Current ratio is 0.2, and debt to equity is 41.4. But let me talk about the current ratio a little bit here for you, because they've got a lot of assets and they've got a lot of liabilities. Reason being, when you buy a ticket from them, you may buy it 6-12 months in advance. Actually, a liability, so it hurts their current liabilities, but they're really tickets that they'll get in the future. Kind of confusing on the balance sheet side, but don't worry about the current ratio being so low. There is a good reason for it.
Yeah, the current liability is known as a customer advancement, so they actually take that on as a current liability. And the problem with them too is they have a lot of longer term assets, property, plant, and equipment. All of those boats total $33.2 billion on the balance sheet. Their total assets are only $39.8 billion. So that doesn't leave a lot on the short-term asset side, and again, a lot of short-term liabilities. Really important you read deep and understand what those all are. Looking forward to November 2017, estimated earnings per share on a GAAP basis, $3.51 gives a target sell price of $57.92. I think it's a little close to the target, from the target sell price to the current price, so maybe be a little patient. I do like that nice dividend of 3% though. A lot to understand here, however.
A lot to understand, and also too, they are fuel sensitive. So if oil goes up, it's going to hurt their earnings. And also too, an interesting fact, we held this company before, their food costs per year close to $1 billion. When you go on the cruise, got all those food, it costs them a lot of money, but they do make it up in the long term there. So, all right, well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. Get the free report on the 5 big mistakes investors make.
Give us a call at the office. Our phone number is 858-546-4306. And if you've missed any previous Smart Investing Daily Briefings, go to our website, smartinvesting2000.com.